What's up, millennials? In exchange for your time and hopefully you like as well, today we are going to take a look at the valuation of Innoviz. And Innoviz is a lidar company that is going to be acquired by the SPAC under the name Collective Growth Corp. And that SPAC so far is currently trading under the ticker symbol CGRO. Before we start though, a few things first. First of all, we are going to take a look at the valuation according to the investor presentation, all right? So these are numbers that are predicted by the company, so Innoviz, and also the SPAC themselves, right? So these are not my opinion, all right? I have to make that very clear because some people think that all these valuation videos are my opinions, but these are all based on the numbers from the investor presentation. Secondly, don't trust me, verify me. I'm just a random dude on the internet and I can be completely wrong. I'm just not an expert. I'm not a financial advisor. I'm just trying to document my journey here, basically. And lastly, Stock O'Clock. These are very short 1-minute videos that I post every single trading day with news about the stock market, so definitely check those out as well. Before we start with the pro forma valuation, I would like to give you a very brief overview of Innoviz. It's very likely that you already know this company if you clicked on this video, but Innoviz is a lidar company, right? And kind of in comparison to what Elon Musk thinks, lidar does seem to become more and more relevant over time, right? This company, Innoviz, is looking at using lidar for various applications. For example, for robotaxis, trucks, sidewalk delivery, and also drones. If you want more information about this company, then yeah, definitely check out the investor presentation, but also their website, of course. But you're here for the valuation, so we're going to hop into that right away, right? First of all, we're going to take a look at the base share price they're using, which is $10 as usual, $10 as stated in the investor presentation. They are going to have 140.3 million shares outstanding after the merger. And that gives a market cap or pro forma market cap of about 1.4 billion, because for a market cap, you simply need to take the share price and multiply it by the amount of shares outstanding. So 1.4 is our market cap pro forma. And then they're also going to have a amount of cash on their balance sheet. In this case, it's going to be $370 million. So if you want to arrive at an enterprise value, if we want to know what Innoviz is worth after the merger, then we simply need to take that market cap of 1.4 billion, take out the net amount of cash, which is almost 0.4 billion, and then we're going to arrive at an enterprise value of a little bit more than $1 billion. However, if we go into TradingView, we can see that the current price of the SPAC of CGRO is currently sitting at $15.50. So that means that the current price has gone up, of course, with 55%, which means that the current pro forma market cap has also gone up from 1.4 billion to 2.2 billion, more or less. And that means that currently Innoviz pro forma is worth $1.8 billion instead of a little bit more than $1 billion. Then with regard to the fair enterprise valuation, the SPAC Collective Growth Corp and Innoviz have helped us out a little bit. They actually provided two different valuation methods, right? Today, however, in this video, we are just going to take a look at the left-hand side comparison, so the lidar peers comparison. Because yeah, the other comparison is a little bit more extensive, and but yeah, the price is very similar to the one compared with other lidar companies, right? So we are just going to take a look at this valuation over here on the left hand side, and as we can see, they are basing that on the revenue multiple of some other lidar companies with revenues taken from 2024 and 2025. They're going to look at their own revenue. Their predicted revenue, of course, is of 2025. And then they're going to use a revenue multiple of 5x. And later on, they are going to give themselves a margin, or yeah, a range of 20% above that valuation and 20% below that valuation. Let's first unpack that a little bit, right? Because there's a lot of information over there. Let's unpack that a little bit step by step. So first of all, they said that they were going to take a look at the revenue from 2025, okay? Let's take a look at their predicted revenue. So for 2020, they expect to have $5 million in revenue. 2021 goes up to $9 million. 2022, it's $23 million. And then it starts to ramp up a little bit. 2023 is $79 million. 2024 is when it starts to ramp up quite a bit more, $237 million. And then 2025 is $581 million is what they expect to bring in revenue, right? Now, as you can see, the years below or the years before 2025 are relatively low in comparison to 2025 and 2024, of course. And as we can see as well, if we zoom out a little bit to make it a little bit more watchable, I hope you can see it on the screen as well. The gross profit is ramping up quite a bit as well. As you can see, the gross profit margin is very low up until like 2022. And then in 2023, it starts to become very attractive actually. And they have relatively high operating expenses, as you can see in this row over here. Which, yeah, compared to the amount of revenue they're bringing in, they're just spending a lot on those operating expenses and just don't get a lot of revenue in return for that, right? So it looks like they need a few years to get settled. It looks like they need a few years to start producing at scale as well. But I think when they do, they actually do provide very good profit margins and very good EBITDA margins. And with regards to the revenue multiple they are using, so the 5x they are going to be using for the valuation, they looked at other lidar companies, other lidar SPACs out there. They looked at companies like Luminar, Velodyne, and Aeva. I already know Luminar and Velodyne. I actually made videos about Luminar as well, and I had a position in Velodyne as well. I didn't know about Aeva just yet. Not even sure if that's the way you pronounce it, but I probably will do a similar valuation video about Aeva as well, because it does seem attractive right now as well for investors, right? So they said, okay, these companies, we're going to take a look at their revenue from 2024 or 2025, and we're going to see at what multiple they are trading at currently. And with currently, I mean December 9th, because the numbers from this investor presentation are based on numbers from December 9th, right? So they say, okay, Luminar, based on the 2025 revenue, they're trading at a 14.5x revenue multiple. Velodyne was trading at a 5.2x revenue multiple, and Aeva was trading at a 3.2x revenue multiple. So the median, basically, yeah, the number in between, which is a little bit simplistic, but all right, we'll take it, is a 5.2x. So that was the reason that they are going to use a revenue multiple of 5x as well. Cool, so now we have those two numbers, right? We have a revenue from 2025, which is $581 million. And we have a revenue multiple of 5x. So let's do the calculation. $581 million in revenue times 5x gives you a valuation of about $2.9 billion. As we said before, they're going to give themselves a range of 20% above that number and 20% below that number. So if we take 2.905 and we multiply that by 1.2 because of the 20% above, then we would arrive at a high valuation of $3.486 billion, which is the number that I put in my Excel sheet over here. And if we take 2.905 and we do that times 0.8, because the 20% below that number gives a valuation of 2.324, which is the number that I put in my Excel sheet over here under the low valuation post-merger. And that means that a midpoint valuation, so basically the average between the low valuation and the high valuation, is going to be this number over here, $2.9 billion. Then to arrive at a fair market cap and a fair price per share, the only thing that we now need to do is first of all take those enterprise valuations. So first of all, the $2.3 billion. And we need to add back the amount of net cash that they're going to have on their balance sheet. And as we said in the beginning of this video, that is going to be $370 million, right? So you simply take the enterprise value, 2.3 billion, you add the amount of net cash, 370 million, and then you're going to arrive at a fair market cap of about $2.7 billion for the low valuation. If you do exactly the same thing for the high valuation, so then it's about 3.5 billion in enterprise value plus the amount of net cash, gives you about 3.9 billion in a fair market cap, right? And then the midpoint market cap would be around $3.3 billion. So then if you want to go to a fair price per share, you need to take those market caps and divide them by the amount of outstanding shares. We said in the beginning of this video, well, okay, there are going to be 140.3 million shares outstanding, right? So then you take these market caps and you divide them by 140.3 million shares. And then you're going to arrive at these prices. For the low amount of share, or for the low valuation rather, you're going to arrive at a valuation of $19.20 per share. For the high valuation, it will be $27.48. And for the midpoint valuation, you would reach a price of $23.34. And then if you look at the growth percentages, so basically like how much ROI you would gain if you would start investing right now at a price of $15.50. Yeah, for the low valuation, you would get almost 24%, high valuation 77%, and midpoint valuation a little bit more than 50%. All right, so there you go. As you can see, the midpoint valuation would be $23.34. And if you look at the current price of $15.50, that will mean an increase of 50%, which means that the current price of Innoviz is undervalued. Now, as I said in the beginning, these are numbers that are based on the investor presentation, right? These are not my opinion at all, because I didn't do extensive research on these companies. I just took the numbers from the investor presentation. Also take into account that if you change one of these numbers, if you take a different revenue multiple or if you take a different revenue number, then you're going to arrive at a very different price per share. And apart from that, never trust me, always verify me. Just a random dude on the internet. I'm not a financial expert, so definitely take that into account. Alright, with that being said, thank you very much for taking the time to watch this video. Hope that you're having a great holiday season with your loved ones. And yeah, hope to see you in the next one. Bye bye.